The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
So we're going to look at the REA Group for Stock of the Day. It has reported an 18% increase in revenue in the 9 months to March to $1.25 billion. Revenue for the quarter up 12% to $374 million. Chief Executive Owen Wilson saying the first rate cut in 4 years, combined with expectations of more to come, has spurred buyer demand in the property sector and supported house growth across the country, which has seen tailwinds, particularly for its portal. This comes as rival Domain has struck a binding deal with US property giant CoStar to sell all of its remaining shares at $4.43 each. That's a 42% premium on the pre-offer price. The agreement valuing Domain at around $3 billion. Media company Nine, which owns 60% stake in the company, expected to pocket $1.4 billion after capital gains tax there. So quite a bit moving in that space. But let's focus on REA. Richard, what do you think, particularly given what's going on with the rival there?
Oh, well, I mean, REA is expensive by any measure. And it's more expensive than, the price that Domain was taken out. REA is trading on 60, 65 times PE. Domain was taken out around 40, 45 times. REA is about 10 times the size. And it has impressive operating margins at around 55, 60%. So I just think, for me, it's just, I wouldn't be buying it. It's so expensive. You're very much a minority shareholder with News Corp owning 62%. But, anything can happen. It's a strong business, but I don't think it's going to get the same leverage effect that Domain does, simply because the operating margins are so high that what you're seeing with revenue growth isn't going to be translated in the same way to profit growth. So I think it's a very good company, but it's so expensive with that News Corp overhang, or whatever you call it. But News Corp's, when you're a minority shareholder, you're very vulnerable.
Given its competitor is going to be gold up, though, does that change the picture or the outlook?
Sorry, given what?
Its competitor, Domain, is going to be gobbled up.
Well, it's going to be gobbled up, but it's not going to be out of the market.
No, it's still going to be there. But in terms of new ownership, what do you think?
Look, I think it's so expensive. That's what I think. My dad was saying, so should I get into the US market? And I said, some of these stocks, they're great stocks, but they're so expensive. We're a value investor. We don't live and die by value. We're not afraid of momentum. But I mean, I just cannot justify putting money into a stock that's trading at that kind of level.
Yeah, all right. So you're recognising it's a very good business, but very expensive. You're holding it still, though?
Yeah, I would hold it just because, I think it's a defensive holding, but you'll see the share price move around, with earnings results when you're that expensive.
Yep.
With the market. But I think I wouldn't necessarily be a seller if I held it. But I wouldn't be overweight. I would be underweight. I wouldn't be an aggressive holder.
Luke, what do you think?
You wouldn't be.
Look, I agree with all that. It's a super quality business. It might be, the best business on the ASX, and one of the ways, you would measure that or you would point to that is just look at the result today. Look at that core Aussie business revenue growth of 13%. But to get there, they had to raise prices 15%. Had some revenue deferral and listings growth is flat. There are not many businesses that can pass on 15% price increases sustainably anyway. But if you asked me, could REA do this for the next 2, 3, 5 years? I'd probably say yes. I mean, it's the sort of pricing power they've got. And I saw someone make the very good point that, the fees that real estate agents and by proxy REA charge, they're capitalised into home prices now. I mean, we sort of don't balk at the fees we pay. It's all just a number on a screen when you're paying an insane price for a house. I won't argue though, super expensive, trades on 50-ish times earnings, which is quite high. I wouldn't sell either though, Andrew, and the reason why is if you've been there for a while in particular, you might be sitting on a nice capital gain. You're not looking to lock that in, but this is a business that probably more than a few of the others that trade on those lofty valuations, I trust this at some point will earn its way into its valuation. Now that might be 5-10 years away, but I have no doubt it can do it just because it's so structurally entrenched in that market. I know you're talking about Domain and CoStar. They'll try and nip at the heels, but I think that gap's just too big now for REA. They can obviously invest ahead of that competition as well. And I just keep thinking no matter what happens with house prices, listings, whatever macro gets thrown at them, the lever of price increases that these guys have that they can pull, I just think it's too strong. So fantastic business. It is expensive. Let's say a hold because of that reason. But, if you don't own it, I could even maybe see having a small position underweight. I think Rich summed that up well, is a good way to do it. But just it's for a small cap special, getting something like this, it's a reminder of the sort of businesses that you can find out there. We hope our small caps can grow into these guys. And REA was 20 years ago, it was a small cap. So there you go.
There you go. You got to start small to get big. Yeah. All right, that's the view on our stock of the day, which is REA Group's a double hold.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.